quite a big decline. I think this is also now raising the view that Mr. Mboweni will cut rates perhaps even before the next
He did
meeting.
say that, giving indicators, he might hold another MPC meeting before the next scheduled. I mean, what sort of indicators do we need to see for him to take that step?
Well, I think these are the kind of indicators that really show how fast the economy is contracting. And, with the contraction of manufacturing comes a contraction of jobs, and that's the last thing this economy wants to see. One reads reports of over 200,000 jobs probably being lost. It's closer to 250,000 jobs being lost if the economy continues under the, on the current path. So I think you want to prevent that. And hopefully you can trigger some spending and help stave off, further losses by, lowering interest rates. It's just one vehicle that you can use.
Let's go to job losses, and we'll start with Hulamin, which didn't say there would be job losses, but it did say that one of the things that would take it out of things in 2009 would be cost-cutting measures. Now, surely that must mean jobs.
I think everybody has to do that. I think they've also been caught by the sharp decline in the global economy. In fact, if you read the report, it was a very, very gloomy outlook, so different from what we read or heard about 6 months ago. But they're also going to have to cut back production. Remember, they were increasing production. There's quite a few new mills that they're bringing in and suddenly have to... I don't know whether they're holding back on that. I think you're going to speak to Alan.
Well, let's speak to Alan a bit later on and find out.
But I think a very gloomy... And the market didn't like that result, marking it down about 10% today. So it took the market by surprise.
Let's also look at further jobs. I mean, in Ellerines, that's part of the Abil group. Ellerines has been a bit problematic. We were all quite surprised when the acquisition took place and thought, wow, this is quite innovative, but it's turned out to be quite a millstone.
I'm sure that if you go into the boardroom of Abil, they're also a little surprised at what they bought. I think they're cleaning it up. I mean, you could see that.
The rationale when they did it seemed, let's buy a credit book, let's get involved in, let's put banks in stores.
Sure, it was going to
expand. It didn't work that way, did it?
Well, they needed to expand. I think they also needed access to, to capital. So I think it gave them a wonderful outlet. They thought, what they didn't realize that they also had to learn how to sell furniture, and it's there's a lot more to do there. Yeah, finance is it's most of the furniture sales today. Yeah, it's a finance transaction, but I think you've also got to sell the bed or the lounge suite as well.
What's worrying, David, is that they are 37% of the loans that they are granting are turning out to be bad. And that's
greater than the number in the Abil operation as well. So they've got to clean it up. They've got to bring the two businesses in line. And I think it's just dragging over them at the moment.
Abil quarterly review showing signs of stable growth in a tricky market, unsecured loans. Does that business model bother you?
No, I think, they're superb operators. I just think that they've got to spend time cleaning up Ellerines in a very, very difficult time. I think it's, but they do seem to be going the right way. I think they're cutting back the number of branches. They're reducing the number of brands, etc. Sure. So they're taking firm action to get it right. But to be honest, I don't think this is where they wanted to be at this stage.
Shoprite, that's a cash retailer, looking forward to headline earnings between 35 and 45% up, and we were expecting that from Shoprite. They seem to be taking the bull by the horns.
I think that's right, and they gave us a warning ahead of this, so I think this is just an update. So that's why the market didn't respond to very good results at that stage it had. So it's in line with where the market's forecasting the results to be.
Let's have a look at gold and platinum up today. That moved the market in certain respects, but we ended down.
The overall resource market ended down. I think that's why we saw profit taking in Anglos and Billiton. But gold shares were strong. Platinums also came back. I think gold's, if you look at the futures market, there's quite a bit of activity there, suggesting that gold could be $1,000 an ounce by March, April. I think this is the flight to security. A lot of concerns about the global economy. So, the dollar and, funny enough, gold are running together. So it's beginning to gain support. Platinum also up, I think, on yesterday's view that came out of the Indaba, that demand won't be that bad this year for platinum, and that's given a bit of equilibrium to to the supply-demand situation. I think that's propped up. Number one, the price went over $1,000 today, an ounce. The platinum price was up, and also I think platinum shares finding some kind of support.
Finally, David, some of the infrastructure-related shares looking good. Is that ahead of tomorrow's announcement, possibly?
I think so. There were two stories. Number one, that more will be spent on infrastructure in order to create jobs or to alleviate jobs that will be lost out in other areas. So I think the two areas, the infrastructure and also interest rate reductions, I think that propped up both construction shares on the market and some of our retailers.